Welcome back guys to another Zero DTE video, and today Coach Ernie is going to be talking about position size, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Coach's education platform. Enjoy guys.
Let me tell you exactly what happened during this time. This is 2 years ago. So I'm moving along and everyone's, wow, that's unbelievable. People would say, hey, Ernie, why don't you just 10x your position size? You'll make way more money. And I said, no, you can't do that because that position size is relative to my total account size. And then that is going to determine the width of this volatility envelope, or this one right here. So if I go 10x, that volatility envelope or the drawdown is going to get bigger. So just by increasing it 50%, not 1,000%, my volatility increased by almost 100% because it was relative to the account size. So I then went into much greater volatility or a bigger envelope, but also at a different trajectory. And then over time, as I started to gain more capital, the volatility of that return started to diminish, just like it did here. It was here and then started to diminish. So every time you increase your position size, when you get to some natural place that you estimate where you can start increasing your position size, 25% or 50%, whatever it is, you can expect to have more volatility in your returns. And then as you grow and grow, because the size of your position relative to your account size is, that ratio is going to change, therefore the volatility of your returns are going to change. That is if you're consistent. If you're not consistent, it's going to be all over the place. The goal is to become consistent with your application of the strategy. And then you can see these things occur. And then it makes it very easy to make adjustments and know when to increase. Your goal is to get consistent so you can do this.
So as we're learning and say we wanted to do, all right, we haven't established our max position, but we'd like to keep it really light because we're still in the learning curve of getting out of paper trading to live trading. But there's such a dramatic difference of paper trading to live trading for the order fills and stuff like that. And then you have to retrain yourself to not get these optimistic fills.
Your average position size should roughly be 1% of your capital. When you're getting to lower capital, it can be a little bit higher, maybe up to 1.5%. Lower capital, I mean around 10K. When you start getting to 25K, it should be about 1%. When you get to 100K, it should probably be closer to about 0.7%, right? That's going to determine your average drawdown and the volatility of your returns. If you notice here, I started out with 23K. I ended up with about 50K. My average risk per trade over that long period was $240. So as I got a little higher, it ended up being just a little bit above 1%.
Thanks for watching guys, I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks guys.